if you're thinking about getting closer to retirement and what that actually means for you, maybe take the mindset away from what should my investment strategy be, at least not first, and think more about what should my income be, and think about planning for an income at a future date rather than just how should my portfolio be aligned. And when we get into that discussion, I think a lot of people conceptualize retirement income per se as I'm going to live off the interest. I'm going to live off the dividends of those income equities. And basically just whatever I get, whatever I can draw off of that, I'm going to protect the principal, and that's all I'm going to do, and I'll just kind of get by with that, right? Or the other extreme is we oftentimes talk about a just-in-case retirement. I'm not even going to touch any of those funds unless there's an emergency. That's the other end of the spectrum. But if you do plan to withdraw from your retirement assets, that can be the mindset, and it can be done that way. But what you have to have is a pretty large portfolio,
right?
A really large portfolio, I would say, and an income need that is not terribly great, right? So if you're going to live on a small percentage of your portfolio, which is what it's going to be, even in today's heightened interest rate environment, you're not really going to be able to pull, and you can't count on, pulling a large percent and being able to protect the principal. So if you don't have a large enough portfolio, John, and you do have a sizable income need, then that's when the planning comes into play from the bucketing strategy perspective, and it requires you to sell shares of certain investments. But what's critical here is controlling what you sell and when you sell it.
Two aspects of this that I'll point out, Scott. One is, yes, you want to sell assets to create income, but you want to sell those assets from a less volatile bucket than maybe a growth or a growth and income type situation. You want to sell something that's fairly calm, fairly staid, because what you don't want is a situation where, like we had last year, where the market had a pretty significant downturn and you were having to sell equity assets while they were down in value. So you would have to sell more shares to generate the same amount of income. That's a no-go as far as your portfolio is concerned, because you can, in a protracted down market, tailspin your portfolio down to zero. And if you do that, then you have run out of money before you run out of time. Not a good equation. The other concept that you've got to think about is that, yes, there is a bucket, if you will, that you're going to pull money from for income purposes, but there is also a growth bucket that you're going to presumably leave alone for a long period of time and let it do its thing, which is grow. So if you kind of think about this counterbalancing each other and creating a bit of a stasis between the value of the as far as the value of the portfolio is concerned, between those two buckets, while one is being drawn down, the other is growing, offsetting that in such a way that you can create income from that stayed bucket and have your growth bucket driving the stability of your portfolio going forward.
Yeah, what kills you if you're all in growth is the volatility of that portfolio. And
Yep.
we've seen that in a very short time frame, a very compact time frame just in the last couple of years, right? Remember, you talk about growth. When I think growth, I think big tech. And you think the back half of COVID year, 2020, tech took off. Growth took off because
absolutely.
we were all at home. 2021 was a great year. 2022 was an awful year.
Right.
I just saw the first 5 months of this year, tech's up like 25%. So it's back up, but it bounces all over the place. So you want to have a component in growth, invested in growth, even in retirement, but you're managing the risk not in what you're investing in, but how long you're leaving it alone.
Those growth tech stocks really do bring home the point that I've said long and hard about equities: is it's never as good or as bad as you think it is.
Yeah.
It is always almost feast or famine sometimes with equities, and you've got to have a strategy that offsets some of that provides you stable income throughout your retirement.